Ira Epstein, and this is the morning after. What do I mean by that? Well, it's not about Valentine's Day. It is February 15th, 2023, 8:30 a.m. Central Time, and the morning after means yesterday's CPI data. Oftentimes, you got to think about things overnight and go, I wonder what that really means. I mean, you've got strong jobs, 517,000 in the last report. You've had now a strong CPI number. I thought it would be the big number of the week. And I didn't get the reaction yesterday I quite thought you would get. You're getting it today. You're starting down in all the stock indices hard. You're driving the metal markets down hard. The dollar's getting a bid. Why? Because the Fed's got to go higher. I mean, I think it's a given you're going to be near 5.25%, maybe 5.5%. And then we'll look at data and see where we're at. Now, that data will be the March data we have to look at because I think it's baked in. You're going to get a quarter-point hike in March, and then we'll get to see jobs data for the month of February. And by the time the other Fed meeting rolls around after the March one, you'll also have the March data. Very important. If jobs data stays this strong, well, it's rolling over into spending. You're going to see today's retail number. That was another nail in the coffin for what the Fed has to do. So you can see how you're sitting here down in most of the currencies, down fairly hard, in fact. You're looking at beans getting hit. So everything that's priced in dollars getting hit. Cotton market, energy markets. A strong dollar weighs on that. So let's take a look, if we could, together. The MBA mortgage market index first, that came out today, and you can see it down 7.7% in the index. The purchase index down 5.5%, and you were down in the refi index down 12.5% versus the prior week. So a slowdown. That can continue as we're seeing the curve yield move out on you. Are you aware the curve yield's knocking on the door of 90 different? If you'll take a look at last year, go back and remember what I said. I said I think that the 210 is going to go to 100. It many times was back into the 30, 40, 50 level. Now it's almost double that. You're very close to where that may peak out. The New York Fed Empire State numbers, they expected it down 20, so it was a bit stronger. Being down in the manufacturing, as you can see, a 5.8 is not as weak as the market thought it would be. However, the employment index did slip. Could that be a harbinger of things to come? New orders index, though, the prior, this is an improvement. Still a decline. These numbers aren't picking up. They're still declining, but not at the pace they were. But the received index tells me there's some business coming in. I mean, that's on the prices paid. And why was that there? Inflation. People are picking up on it. Now, advanced retail sales. Let's go right there. What does this mean? So for January, is it possible, and it's very possible, that people just said, you know, I think I can wait and I'll probably pick things on sale after the Christmas sales. Now, Christmas sales, adjusted, take out the inflation, they weren't stellar. So that's what I think was going on here. But as you grow into it in the control group, and they do that when you break in, that was up 1.7%. That's very big. So something's going on. The consumer's not scared. They're spending money at this point in time. When you take a look in a few minutes at 9, we're going to get the National Association of Home Builders. The Conference Board, January online help wanted index will come out. I like JOLTS better than I do that. U.S. December business inventories, that's going to be important at 9 o'clock. Are they building or not? I don't know if you saw the petroleum number on the API, but it was big. I mean, alone, the crude was up over 10 million barrels, and then all the products saw increases on top of it. What gives there? Well, that's going to be the interesting question that the EIA, when it comes out, either confirms that or, if you will, goes in and says, no, that number has no reality to it and there's something else actually brewing. But you're getting your initial sell-off. We'll see if the markets can hold. There's been a tendency, and I think I'm the first one I wrote about it and told you about it yesterday, that each break still gets the buyers, the naysayers coming out and going, you can talk all you want, Ira, and you other people. The Fed is not going to stay. They're going to go up maybe another quarter point. Maybe you'll get your half point. Then they'll sit flat, and then the consumer's going to roll over and go down. The problem with that thinking, and it's a big problem, is the stickiness of the inflation, the rent, and things of that nature. Now, the interesting part is where the markets have been headed. I don't know if you've been watching the Bollinger Band studies, but those markets that have been hitting them, be it on the downside or the upside, getting stopped dead in their tracks. Take a look at yesterday's Dow Jones if you want proof of that. I said that narrow band leads to choppiness. Well, if you take a look at where you hit that band yesterday, I contend that anyone that was even thinking the long side was running for the hills, and they did. Take a look at this if you want to learn something about those Bollinger Bands. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein on the road to your education.